Hey everyone, welcome back to the channel. I'm Shashank from Ditto, and today we have a very interesting video for you folks. As you might know, insurance has a lot of jargons, very niche words, and someone who's reading up about insurance for the first time can get super confused. Trust me, I myself have been there. So I thought, why not break down some commonly spoken and misunderstood terms in health insurance. By the end of the video, you'd find it relatively easy to read a policy document or even understand the videos that we make specially for you. Now folks, before we get into the video, let me tell you that you can book a free chat with our IRDAI certified advisors with the link in the description. Now let's start breaking these complex terminologies. First, waiting period. A waiting period is a crucial policy feature where your insurance company won't cover certain treatments or conditions immediately after you buy the policy. This protective measure helps insurers prevent people from buying insurance only after they get sick. Different conditions have different waiting periods, usually 30 days for general illness, 2 to 4 years for pre-existing conditions, and 1 to 2 years for specific treatments like hernia or knee replacements. For example, if Seema buys a health policy whilst having diabetes, her policy has a 3-year waiting period for PEDs or pre-existing diseases. During these 3 years, any hospitalization or treatment relating to diabetes won't be covered by insurance. However, she's still covered for other unrelated conditions after the initial 30 days waiting period. Number 2, deductible. A deductible is the fixed amount you agree to pay from your pocket before your insurance coverage kicks in. Choosing a higher deductible usually lowers your premium because you're agreeing to take on more initial costs yourself. For example, if Ravi's policy has a 25,000 rupee deductible and his hospital bill is 2 lakhs, he'll first pay 25,000 rupees and then his insurance will cover the remaining 1.75 lakhs. If he has another claim in the same year, he'll need to pay the deductible again before the coverage begins. Third, copayment or copay. Now this one's interesting and the most requested. Copayment is a cost-sharing requirement where you pay a fixed percentage of each claim amount whilst your insurer covers the rest. Now, this feature is often mandatory for senior citizens or in policies with high sum insured. It's designed to prevent unnecessary hospitalization and ensure responsible use of insurance. Let's hear an example. With a 20% copay clause, if Priya's hospital bill is 1 lakh, she pays 20,000 while her insurer covers 80,000 rupees. This applies to every claim regardless of number of claims in a year. Some policies also have a different copay percentages for different types of treatments or hospitals. If you didn't get that, well, I'll link a video here. We spoke about copays, deductibles and co-insurance in detail. Check that out. 4. Cashless hospitalization. Now, this is a fantastic feature that eliminates the stress of arranging funds during medical emergencies. When you get admitted to a network hospital, you don't need to pay the bills first and then wait for reimbursement. The insurance company directly settles the bill with the hospital except for non-covered expenses. For example, when Rahul needed emergency appendix surgery, he reached out to his insurer, got a pre-authorization from them. The hospital coordinated directly with his insurance company and all the covered expenses were settled between them. Rahul only paid for non-medical expenses like visitor meals. 5th, pre-existing condition. Pre-existing conditions are health issues, diseases or injuries that existed before you bought your health insurance policy. Insurance companies require you to declare these during your application because they affect your coverage and premium. These conditions usually have a waiting period of 2 to 4 years before they're covered. For example, if Rohan has been diagnosed with hypertension 2 years before buying the health insurance policy, it's a pre-existing condition. He must declare it in his application form. His policy will start covering hypertension-related treatments only after pre-existing diseases waiting period. However, he's still covered for unrelated conditions like accidental injuries. 6th, network hospitals. Network hospitals are healthcare facilities that have a direct agreement with your insurance provider for cashless treatment. These partnerships ensure standardized treatment costs, streamlined processes, and quality healthcare services. The hospital and insurance company have a pre-agreed rates for various treatments, which helps prevent billing disputes and overcharging. For example, Sarah's health insurance company has tie-ups with 9,000 hospitals nationwide. Before a planned surgery, she checked her insurer's website to find network hospitals, compared their locations and specialties, and chose one closest to her home. This made her admission process smooth with no upfront payment needed except for her copay amount. 7th, migration. Now, migration is a valuable right that allows you to switch to a different health insurance plan within the same insurance company while preserving your accumulated benefits. Now, this is different from porting. We made a whole video about insurance porting. I'll link it here. Please check that out. Migrating includes continuation of waiting periods that you've already completed, no fresh medical tests needed in most cases, and retention of any no-claim bonuses you've earned. It's particularly useful when you need higher coverage or different features. We soon will be doing a dedicated video on this topic, so if you haven't subscribed yet, please do. Now, before we go ahead, a little about Ditto Insurance. We are an insurance advisory platform and we are all about spam-free advices and quality advice. We have a host of IRDAI certified advisors who are waiting to give you the right insurance advice, be it health or term insurance. So book your free chat with us with the link in the description and our advisors will reach out to you. Back to the video. Now, for example, when Amit's family grew, he wanted to upgrade from a basic 5 lakh health cover to a comprehensive 20 lakh policy with maternity benefits. Through migration, he kept the 3-year claim-free bonus and didn't have to serve fresh waiting periods for conditions already covered in his previous policy. 8. Sublimit. Sublimits are specific caps on expenses within your total sum insured, acting as internal boundaries for particular treatments or services. These can apply to room rent, ICU charges, specific surgeries, or even doctor consultation fees. It's crucial to understand these limits as they can significantly impact your out-of-pocket expenses, even if your total sum insured is much higher. For example, Priya has a policy with 5 lakh sum insured, but with a room rent sublimit of 5,000 per day. When she was hospitalized and chose a room costing her 7,000 rupees per day, she not only paid the extra 2,000 daily, but also had to bear 30% of all associated medical expenses because they're proportionally impacted by room rent differences. 9th, inpatient treatment. Inpatient treatment refers to medical care that requires hospitalization for more than 24 hours. This includes the cost of room charges, nursing expenses, surgeon fees, medicines, diagnostic tests, and other related expenses during the hospital stay. Insurance companies typically cover all medically necessary expenses during the period, subject to policy terms and sublimits. Now, for example, when Karan was admitted for severe pneumonia requiring a 5-day hospital stay, his insurance covered all expenses, including his room charges, medications, doctor visits, and diagnostic tests. However, any personal expenses like telephone calls or attendant charges weren't covered as they weren't part of the medical treatment. Finally, 10th, IRDAI, or Insurance Regulatory and Development Authority of India. IRDAI is the apex body that regulates and supervises insurance sector in India. They ensure insurers maintain financial soundness, fair business practices, and policyholder protection. This authority sets guidelines for policy terms, claim settlement timeframe, and grievance redressal procedures, making sure that insurance companies operate transparently and ethically. Thanks to IRDAI regulations, insurance companies must settle or reject claims within 30 days of receiving all required documents. They also mandated the standardization of health insurance terms and coverage for COVID-19 treatment, ensuring policyholder protection during the pandemic. Now folks, this brings us to the end of this video. We'll soon push out another video where we break down complex terminologies from term insurance world. Now, until then, happy insurance hunting.